Start.
Hello students, today we'll discuss about the Union Budget 2023-24 and particularly our points of discussion will be on the impact of this Union Budget on capital market. But in general, we'll try to discuss the whole thing in short. The Government of India has planned to simplify KYC process, solution like DigiLocker and other for maintaining identity, which will be made available and using for PAN as a common identifier. This will enhance digital infrastructure and thereby it will be increasing credibility in the banking ecosystem. And second point, that government has planned to infuse rupees 9,000 crore in revamping of credit guarantee scheme for MSMEs and also reducing cost of credit by 1%. This will be positive for MSMEs sector that will have access to much needed credit for growth and which is positive for PSU banks like SBI. This means if the people, common people, they invest in public sector banks in capital market, they may be benefited by this budget. Thirdly, improvement and enhancement of banking governance and investors' protection amendments have been proposed in Banking Regulation, Companies Act and the RBI Act. This is positive for the banking sector as it will enhance the trust in the system and which will help to increase the financial literacy among the common people. Next, important point which have been reflected through this Union Budget 2023-24 is that government plans to offer deposit facility up to rupees 2 lakhs for women or girls for a tenure of 2 years at 7.5% interest per annum, and also to enhancement deposit limit from rupees 15 lakhs to rupees 30 lakhs for senior citizen savings scheme. Also, it has enhanced the deposit limit for monthly income account scheme from rupees 4.5 lakh to 9 lakh for single account holder and from rupees 9 lakh to rupees 15 lakh for joint account holder. This is positive for the welfare of women, girls and senior citizens as it will provide financial security. Next, income from insurance policies above rupees 5 lakhs will be taxable except ULIPs if the policy is issued after 1st April 2023. Income from policies below rupees 5 lakhs remain unchanged. This will have a bad impact on insurance sector because above rupees 5 lakh from the insurance income it will be taxable after 1st April 2023. This is negative for the insurance sector as the traditional insurance plans such as endowment plans and money back plans will become less attractive to the policyholders. Therefore, in the insurance sector, the shares which are available in the capital market, the ordinary people, they should avoid those investments in insurance sector. Next, financial outlay of rupees 2,932 crore for interest equalization of 3% for the manufacturer exporters of MSME sector with effect from 21st October and 2% for manufacturer exporters of specified tariff liners for the purpose of providing globally competitive credit, which will be beneficial for MSME sector exporting output globally. Next, plans to develop digital infrastructure and skills enhancement for youth by providing on-job training, industry partnership for teaching new age skills for lakhs of youth within 3 years under Pradhan Mantri Kushal Vikas Yojana 4.0. This is positive for IT companies and upskilling of human capital. Therefore, in the capital market for the IT sector, shares like INFOSYS, TCS, etc. will be benefited, and people can invest in IT sector positively. Next, granting of research and development to one of the IIT for 5 years for developing lab-grown diamonds to encourage employment, indigenous production of LGD seeds, and to reduce import dependency, which is positive for companies like Titan. Because for the lab-grown diamonds, government has taken initiative, and the share like Titan will be benefited. And now the ordinary people, they can invest in the share like Titan, and which is very important, one of the very important and precious shares in the market, which was 800 to 900 rupees 2 years back. Now it is 2400 around. Next, capital expenditure increased by 33% to rupees 10 lakh crore, that is 3.3% of GDP, which is positive for the infrastructure sector as well as allied sectors like cement, real estate, paints, FMCG and FMEG. Stocks such as Ultratech, Asian Paints, HUL, Polycab and Crompton will be benefited by it. Next, plans to extend a 50-year interest-free loan to the state government for 1 more year with an outlay of rupees 1.3 lakh crore, which is encouraging the state government to undertake capital expenditure activities and improve infrastructure, which will benefit infrastructure and capital goods companies of the state itself. Next, invest rupees 75,000 crore for 100 critical transport infrastructure projects for last and fast mile connectivity. This is positive for logistic companies, and also this would boost top line growth of ports, coal, steel and fertilizer companies. Next, government will establish an urban infrastructure development fund UIDF with an allocation of rupees 10,000 crore per annum, which would improve urban infrastructure in tier 2, tier 3 cities. Next, increase in capital expenditure of railway and defense sector, which will improve the security of our country as well as the infrastructure development in railway sector. And therefore, the share in the railway sector also will be benefited, and also by allocation of rupees 35,000 crore towards energy transition and net zero objectives, as well as rupees 19,700 crore for national green hydrogen mission with a target of annual production of 5 MMT by 2030, which will investment of rupees 20,700 crore towards grid integration of 13 GW renewable energy from Ladakh. This is positive for the power and renewable sectors, and this is a step towards a carbon-free economy by 2070, which is very important for the global warming all over the world, which we can say our government of India is very much interested to take our economy by 2070 as a carbon-free economy. Next, expenditure of rupees 2 lakh crore has been allocated under Pradhan Mantri Garib Kalyan Anna Yojana, a scheme to supply free food of grain to all Antodaya and priority households for the next 1 year, which is expected that this is by this to benefit 80 crore people of the country. Government plans to set up a national digital library and physical libraries in states across languages, genres and levels, etc. and also has plans to collaborate with NGOs. This would help in promoting literacy among the children. We know we have the problem in India among the general problem of the literacy rate should have been increased, and not only the literacy rate, financial literacy is also important, and for this Government of India has taken initiative by this Union Budget 2023-24. Now Government also has planned to outlay rupees 7,000 crore for e-courts projects which will promote efficient administration of justice. By e-court, the common people can get justice which was long pending. Now Government has allocated 15,000 crore for next 3 years towards Pradhan Mantri PVTG development mission, which will improve socio-economic conditions of the particularly vulnerable tribal groups. By this initiative, Government has taken initiative for the development of the tribal groups of India. By allocation of rupees 5,300 crore given to Upper Bhadra project in the drought-prone central region of Karnataka, this would bring in relief for people affected with the drought in Karnataka. Now, increase in rebate limit of rupees 7 lakh from 5 lakh in the new tax regime, which will benefit the ordinary people, those who are the taxpayers. They are getting pain every year, and Government has taken initiative for those persons in the new tax regime with an income up to 7 lakh will not have to pay any tax. You know, previously it was 5 lakh. Now Government has taken initiative to increase the limit up to 7 lakh. Under section 87A, it was up to 5 lakh rupees 25,000. Now it is up to 7 lakh rupees. One will get a rebate of 25,000. By this, the ordinary taxpayers who have income up to 7 lakh not have to pay any tax. This will be increasing the income in the hands of the common people. By that the people, they can spend in the market more amount. By that the common people also can have their cash flow in their hands. And the next, standard deduction of 50,000 to salaried individuals and deduction from family pension up to rupees 15,000 is currently allowed only under the old regime. Government has proposed to allow these two deductions under the new regime also. That is, standard deduction of 15,000, and for the pension holders 15,000 will be continued as before. Next, Government has proposed that capital gains of market-linked debentures will be taxed as short-term capital gains instead of long-term capital gains. By this also, the ordinary investors in the capital market will be benefited. And now everybody knows the changes in the new tax regime that is not needed to explain in detail at this position. It will take much more time. Now we can say, as per the earlier tax slab, the proposed tax slab is also very much interesting, and by this the common people not have to pay tax up to having income up to 7 lakh. By this total, in short, we can say the Union Budget 2023-24 has been very much beneficial, very much friendly, which I say for the economic benefit of our India and for the common people, those who are having good income in their hands. Government has tried at their best level. Thank you.